Yeah, ended up taking two full losses today. But the thing is, I mean, as you take the full losses, you learn, you see. So I'm just doing my back test through my session for today. So started the session, higher time frame. I left the higher time frame marked up, of course. So what happened? Price pushed right here, came, created a low here. That low wasn't broken until this point here, in which it ranged down. So that's why we have our high here, low here on the highest time frame. So now we can go down to the one, and this is where I'll actually go to knock my stuff back. So I show up at 7, so we got one candle here. When we look on this time frame, we see that it actually aligns perfectly with the 1 hour. So this was the last low. We see it never got broken till here, and once it did, once it was broken here, all it did was push, 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 creating a low. So matching the time frame. So on here now I'm going down to the 10-minute. I see that on the at least on the 15-minute, which is the 1 hour time frame, that we at least have solidified this as our low. So I could be looking at a retrace of some sort, or price could continue ranging. Continue pushing, but we just don't know. So now we're going to the 10-minute, and we want to focus on this. We want to focus on this area on the 10-minute though. We come down here to the 10-minute, and one of the main things we see is, okay, price hasn't given a reversal of structure yet. So if we look, price created a low here, and then it pulled back, of course. And then when it broke this low, all it did was push down. So current market structure on the 10-minute is, this is our high. $10-minute, and this is our low down here. The matching low as, so the 1 hour, 15, and the 10-minute all have the exact same low. So what I'm looking for, I'm seeing, are there any gaps within this zone that I can shorten this zone? Because the zone falls within the 50. I know that just by looking, but we can draw it, see it falls within 50. So it really doesn't have to be touched, but I'm just looking to see, are there any areas that price might try to come back and fill before? So there's not really any gaps in the market anywhere that would matter other than here. There's a small gap between here and here, which price is currently testing. So now I'm focused on this area because the 10-minute push, retrace, and now I'm looking at a continuation of where price could potentially be shooting down on the 5-minute, looking to retest something else. We're just going to go ahead and see what this area is kind of doing on the 5-minute. So we go to the 5-minute. What do I see? I see that price created a low here, created a high, created the same low, but the difference is 5-minute actually broke the high here. So 5-minute actually broke the high and then went wick. This one went higher, this one went higher, this one went higher, this one went higher. So now we have a 5-minute high right here. And our 5-minute supply zone is here. But clearly this 5-minute supply zone is way too large and it doesn't fit within our 50% range. So the first thing I want to do is draw on my fib. So I need it with at least within the 50% range pullback. Let's see, are there any gaps in the market anywhere that might be filled? So the last gap that falls is right here. It's a very small gap right in between here. Oh, actually there's another gap right here. So this gap doesn't count because it's already been filled. So it was a gap here, this one's been filled. This gap hasn't been filled. So there's a gap from here to here. I'll just pull that and mark this as an imbalance. Mark that as imbalance zone, but what area near it? So right here, I actually like this candle right here. I like placing it right here. Why? Because this area right here is the gap that was most recently filled. Like, it didn't fill it completely, so I could see it coming back to at least here. But if it wants to come and fill this last imbalance in the market before pushing up, if that's what price wants to do, then I like that my zone is right here where it could just be potentially looking to fill this last piece of gap or the last imbalance here, which falls within my zone. So I can get rid of my fib. I have my zones. So market story right now, and an idea that I have about market story is that, hey, price could potentially be looking to make its way down to here, but once it makes its way down to here, it's looking to push up because price is due for a higher time frame retracement to the upside, even though things are downtrending now. But remember, as a scalper, it's not about what price may do in the next few hours or days. It's about what is price doing right now that I can quickly look to take advantage of. So we're gonna give our thing the 3 candles rule, so we don't trade the first 15 minutes of our session. So 1, 2, 3, and what do I see here? Price went back to this 10-minute and tested. It also has some internal structure formed right here. Again, I don't trade internal structure, but I do manage my trades with internal structure. But just seeing this gives me more confirmation in getting in this sell because price is testing off this 10-minute zone. So if I get a bearish confirmation with a break below. So this one was a bearish confirmation, but it didn't break the candle. It actually led to a bullish candle. So now I need another bearish confirmation candle. And if the very next candle after pushes down, we're in. If it doesn't, we're not. All right, so we got a bearish candle here. So if it can break, we are looking to enter. Simple as that. So we're gonna see. Did it break? No, it didn't break, but it created another bearish candle here. So we can adjust our entry. So we want to look to get in slightly below. Stop loss at the top of the wick. And 10.5, that's 11.5. 11.5 is 23, so 23.5 is the area we are looking for as our TP. So now let's see if we get entered. Boom, we got entered into this trade. This is the actual trade that I took live market as well, so that's good. My back testing eyes are seeing the market the same way that my live testing eyes were. So what I need to do is now I need to go to the 1 minute and decide, hey, is there anywhere for me to take a stop loss? So what I see is that 1 minute structure is here. Then it broke. So this is the 1 minute low right here. That hasn't been broken yet. This is the 1 minute low. This is the 1 minute high. So I can just come in and mark this off as 1 minute high. So now until price really breaks structure, there's nowhere to exit this trade early. So let's see if it breaks structure to the downside. Let's let the market go. See what it's gonna do. So price gives us a big push, big push, big push. So we want to go ahead and pause and go here. So we see now, hey, so price broke this low, but technically this is still the high. But I do see this internal area right here. So what I want to do is I want to pull this to here because this is the new low. And I want to mark all of this entire pullback. Now, for me personally, I'm not going to move it to this internal structure yet. I want to see price push off this area. If it pushes off this area, then I'm comfortable moving it to the internal structure because whether it rejects the low or not, it showed me enough of an impulse retrace. Because what you have to understand is, even though this is internal structure, this is the entire, if I move it like this, you feel me? I can't forget that in reality, the entire supply is all of this. So price can push and break and close right past this and then shoot right back down, and it had not broken structure. So that's why I'm leaving it until we get some type of push off in the direction we anticipate. So let's see if we do get that. We get a little bit of a push. Okay, it actually tested the low. So no matter what it does after this, I'm comfortable using this. Now I'm comfortable using this structure here. So what we'll do, we'll come here, and this is our low because price did what? Impulsed, retrace and retest it, and now this is a continuation. So what we're looking for is if it breaks the low or not. If it can't break the low, we're going to hold it until it breaks this. If it can break the low, hey, we're going to adjust structure. Simple as that. So right now it's looking pretty good. Again, same move I took in the live market. We just back testing it to see. So price hasn't broke it, but price is testing within the 1 minute. Boom. So now that it's all the way up there, that's where I need to go to the 1 minute and start watching, right? So now let's watch at the 1 minute, because if we get a break and close above our candle, we're exiting. If it's just a wick, we're not exiting. If it's a break and close, we're exiting. Wick above, no break. Even get, oh, okay, so we're getting a nice push down again. So now I don't mind going back to the 5, but I see on the 5, it would just literally came right back into it. So we're going to keep watching it from the 1. See what happens. Boom. Okay, price wicked above but didn't close above. So we would have held, and then the very next candle broke and closed above, but it hit our stop loss before it closed. So that would be our first full loss that we took. Now let's take a look at it from this perspective. Right? So that was our first full loss we took. Yes, it was in profit, and sometimes managing our trade, it does that. Again, our trade management is there to protect us. But when market structure is, sometimes market structure takes on a certain, the way that market structure aligns, sometimes you can't avoid the loss. Sometimes you just have to take it as part of your edge. Look at it, learn from it, see if it's anything you could take to try to add to your trading. But sometimes you got to understand, it can be a great trade. Like in this case, this was a great trade. I don't think it was a bad trade at all. The trade just didn't make its way to TP the way I thought it would. And at the same time, me managing it in a way to protect myself, the market got a little sporadic. So I wasn't able, it didn't present me an opportunity to protect myself. You feel me? When it wicked through the zone, it closed back within it. So I had no reason to close. But then the very next candle broke past it. And I can't assume, it's breaking past it and going to hit stop loss. No, I have to give it the full 1 minute to see if it's actually going to come back down like the first candle had done. You feel me? So let's go back here. I can't assume, because price is pushing up, it's going to hit my stop loss. No, I have to wait to see, because the same way this candle wicked outside of it and then pulled back within, this one could have done the exact same thing. Or it could have just wicked up past it a little bit just to shoot down, clearing some liquidity out. But again, we don't know, but we like the trade. It just didn't go our way. So now we're looking for our second opportunity. So what we do is go back and evaluate everything, basically make sure no structure or anything was broken to the point that we need to adjust. So looking here, what do we see? We'll start at the 10 minute. 10 minute, nothing has changed. Price is still within this range. Price is still testing around here. I still wouldn't be surprised to see price push off of here. We go to the 5 minute. What has changed? Nothing. This is still the structure high. This is still the low. This zone still needs to be tested. We still have this imbalance. So my sentiment on price and my idea of what the story of price may be telling is not changing. It's still the same. We just got stopped out. So now we're looking to see, hey, price is back up in here. Let's see if it rejects it again, and we might get an entry opportunity. What do we see? Boom. Immediately a bearish candle. Looking to enter a little bit below. Stop loss right here above this candle. Whenever it's a super long confirmation candle, I'm okay just taking the top, because you gotta think about it like this. If price pushes past this candle, all the way up here would probably be safest, but this is a super long candle. If price pushes past this, I'm pretty confident in it than, just having it all the way up there. It's just something for me. Whenever it's a super long confirmation candle, I'll take the candle over the structure just because I'm more confident in it if price can't make a way to push past it. So let's see if entry's triggered, and it's triggered. So we want to do adjusted 15, 16, that's 32, 32.5 is, we'll just do 32, that's 6, close enough. Right, so we want to go there. Again, we do use internal structure when to manage trades, but we have to kind of make sure first. So what we want to do is go to the 1 minute. Is there anything? So structure wise, we understand this high hasn't been broken. This high, but we don't need to go that far for 1 minute. With 1 minute structure, for the most part, you just want to focus on what's currently happening now. So what's currently happening now, I see price is pushing up. So I need to identify this is the low to know if price breaks that, I'm looking to adjust my structure. And I could use this whole thing, but what I'm going to use is this last bump right here. Because ideally what I would like to see is, okay, price pushes off of this to break this low. I would still have to leave this as it, but then if price breaks the next low it forms, then I can adjust structure. So I'm okay with having this as my management point. Now I understand with whenever my management point is this high, until price breaks structure and gives me another option, I understand that there's not really any opportunity to save on this loss if it turns out to be a loss. I kind of just have to take it. So let's see some more candles. What do we get? Boom. Price breaks past, breaks structure. Let's go to the 1 minute and look. Boom. It definitely broke structure. However, you got to remember, because it broke structure, this entire thing here is the supply. This entire thing from this high low that was broken to the high is the demand. So I can find a point within it, which I like this point here to identify as my structure, which I will use to protect myself. But I'm going to just leave it here for now. Now, if price forms a new high or low and starts to do something, then I can do it. So let's go. Let's see what the next candle is. Immediately starts pushing up. So I can go to the 1 minute and I know, okay, price solidified. This is the low. So now once price breaks this low, or if it breaks this low, now I can adjust and protect myself in the market. So let's see what happens from here. Again, boom, price just breaks through, wicks up, stops us out. Not really much we can do here. It breaks, closes, stop out. That's my 2 trades for the day. And this is an example of, like, you just got to understand what comes with trading, bro. Like, it's not always going to be wins. Sometimes you take great trades. Both of these trades were really good. Both of these trades follow all my rules. They obey the way I see the market. They follow market structure. The story from the highest time frame down to the lowest time frame makes a lot of sense to me. But hey, you got to roll with the punches. And these were my 2 trades for the day. They both ended up being losses. But going back through, I'm very happy about it. Another little secret, or maybe not even a secret, that I like to do. The reason that I mark my session, so from 7 to 11, which is the time I trade, is because once I finish with my 2 trades, what I like to do is kind of zoom out and just look at what price did during my session. So during my session when I first started, price pulled up, pushed down a little bit. It was kind of rangy, honestly. Pretty much during my session, it ranged. Now, of course, market structure and everything presented opportunities for me that I am very happy with. They were really good opportunities. I love the way I managed them and everything. Looking at these trades, I don't see anything that I could have done differently. And that's the biggest thing. It's not, while you're live trading, you could be dealing with emotions and stuff. But once you are done live trading and there's no money at stake and you go back and back test, that's typically when most traders start to see all these mistakes and things they could have done differently. The goal is to make sure that the way you're viewing the market when you're live trading is the exact same way as you're viewing it when you're back testing. That way, if you back test the exact same session you just got out of, you should kind of look at it as, yeah, maybe some tiny things or tiny adjustments, but for the most part, it shouldn't be a bunch of things you missed or could have done differently. It should be pretty consistent. And going back through and back testing, my view and the way I've seen the market live during my session and the way I see it now are exactly the same. So I'm comfortable. I'm confident with today's results. I'm done for the day. I might play around in one of my other accounts, but I'm done for the day. We leave the market and see what happens tomorrow, but that's simple as it is. Back test, took our 2 losses today. Just because it stopped me out don't mean the story isn't what I think it is, like, let me go to real time. Like I said, bro, that doesn't mean like I said, bro, doesn't mean that the story isn't going to play out how he said. So Yeah, we might be done, but look at the story playing out exactly how we kind of expected. Is hey, it didn't break this high. It's making its way down. I wouldn't be surprised to see it test in here, and if it tests in here, I wouldn't be surprised to see it get some momentum to push up and push through this zone. Why? Because price is due a major upside pullback. Um, when you go to the higher time frames, you see price has ranged and pushed very, 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 very far down. There's gaps here. There's gaps here. There's a small gap here. After that this is kind of where the gaps end. So it could push up to here and push off, but ultimately I think it might make its way back up to the supply because this isn't a adjusted zone. This is a like, hey, this is where structure broke zone. We didn't refine this at all. So I could see price making it all the way up to there. So I could see price getting some momentum off of this 5 minute and starting his push. So in my other account, I'll probably take this trade if it does. But in my account that I trade in journal and everything like that, I'm done with that one. I took my 2 trades for the day in that account. Now I can either leave the market completely or trade in another account. I still have to 11 to kind of sit and mess around with the market. But see, now this is live time. So we ended here where we got stopped out. But like I said, that doesn't mean your story doesn't play out. And I don't get frustrated or annoyed afterwards. I just like to see that, okay, the way I view the market storytelling is accurate a good amount of the time. Now it's just being able to take advantage of that and execute trades. Like today, we just got caught in 2 different liquidity traps, so our trades didn't work out. We got in our first trade here, got liquidity snap there. We got in our second trade around here, got liquidity smack there, and then price decided to make the move to the downside. Annoying, yes. Frustrating, maybe, but hey, it is what it is. It's part of being in the market, part of playing and taking a chance in this game, making this a career of choice. So that was today's session. Hey, we'll be back, right? We'll be back tomorrow, end the week off, see how it is. And again, this is Q4 too, so I'm not super mad or upset when losses happen. I understand it's Q4, it's the holidays, it's really the worst time of year to be trading. So things like this are going to happen more. Like in the beginning of the year, Q1, especially Q2 and 3, a lot of stuff is a lot more cleaner. You won't see a bunch of this all the time. Of course, it'll still be days where it's like this, but it'll be more cleaner structure more often than not versus things like this and a bunch of different fake outs occurring and liquidity snatch. Like that happens all the time in the market, but it doesn't happen to the capacity that it does in the fourth quarter. In the fourth quarter, it's really like you're going to deal with the most manipulation and stuff in the market. And hey, if you're trading through it, cool. Keep getting your experience. Probably lighten your risk a little bit. If you're not trading through it, kudos to you. You probably took advantage of the rest of the year, and like, hey, you're not working during this time because you understand market conditions. And as you trade more, if you're new, like, you will start to understand, like, okay, Q4 is horrible market conditions. That's something either I don't need to trade, or if I still want to trade it just to keep myself in rhythm, I'm going to do that. I actually might just keep this video going because I definitely am going to take this trade if the trade plays out. So this will be a first little live trade because I decided that I am going to post these little back test sessions just every day because I'm gonna do them every day. I'm gonna back test it every day. But today I guess it's a little extra. So shout out to the extra, right? Who would have known by the time I finished back testing that price would have been all the way down here? So now that it's at my 5-minute zone, I really just need a 5-minute confirmation. And then I'll enter on the accounts that I have my personal like little live account that I'm on a growth challenge with. And then I have like 2 FTMO accounts that are really pretty deep in drawdown that I just kind of play with. Again, like for the fourth quarter, I wasn't trying to put a bunch of money in the market, nor was I trying to buy a bunch of other challenges or anything. I was really just trying to maintain and make what I have available to me last because, uh, again, I think, and I don't say this to do anything, but you got to think there's holidays all year round, and prop firms and stuff never go on sale that often. The reason they go on sale so much, Black Friday, Christmas, Thanksgiving, all of that stuff, is because quarter 4 is the worst market conditions. If they can get you to buy a challenge or something during the worst market conditions, they know that there's a high probability chance that you're not going to pass it. Now, some people buy them and hold them until, the quarter goes back to quarter 1 and then start trading it, which is probably the smartest thing. But most of the time when you buy a challenge, you're ready to get in there, get started, get that market experience, and, potentially change your life by passing the challenge. But as you start to get up there in years as far as market experience, you will start to realize some of the games and tricks that they play. And that's one of them that I just realized this year. I'm like, bro, how did they never do sales all year? But then Christmas, Thanksgiving, Black Friday, they have back-to-back sales. And then you start to understand, like, well, dang, most people lose during the fourth quarter. Most people, the market conditions are bad. Structure is not as clean. It's a lot of consolidation. It's not the best time of year to trade. So it makes sense. Give people a discount so that they're participating in the market during the worst possible time. And it's a higher probability they don't pass and you end up getting to keep the fee. And I mean, you can't be mad. They're a business. They're a business. They have to make money too, so they have to think logically in ways like that. But you got to think like a business. Again, your trading is a business itself, so you got to think like a business as well. Like, hey, this is the worst time of year for us. Prepare for it. Cut your risks. Don't trade at all. Whatever you need to do, but you have to prepare. So I am gonna let this video run, and you'll see me take a live trade. Now, you're not gonna see me go into my live account on here, just because that's a little OD, but I'll set this up for the trade, and I actually am taking the FTMO. How much do I want to risk? I think I'll risk like $50 or $60 on this trade. $50 or $60 on this trade just to see, and it's one that I've been eyeing since the beginning of my session. So this is actually one that makes a lot of sense, and I'm willing to take that chance on. So honestly, I'm gonna do 70. Why not? All right. So what has happened? Price has literally just filled this imbalance. So I like it. Just because an imbalance is filled and broken does not mean anything. I draw imbalances for the fact of making sure I'm aware of where they are and where they happen, because sometimes price gets right to the imbalance and then gives us our thing. Or, like, let's say price got close to here, but it's an imbalance right under. In your mind, even though you're probably still going to take the trade if the confirmation presents itself, you just prepare yourself for the idea and the fact that, okay, well, I wouldn't be surprised to see me get faked out potentially because of this imbalance. But now that this imbalance is filled and there's no other imbalances below it, now I'm confident that if price is about to push, it's about to push and push soon to the upside. And now it's just kind of waiting for a confirmation. So that's what we're doing. We're just waiting to see if we get a confirmation. I mean, this is a running video, so what else can I talk about? I really don't even know, honestly. Like, I don't really have nothing else to talk about. Like, the trading is soon, and for the most part, I mean, I'm posting these to journal for myself. But hey, like, you never know who might come across this, and whatever the case may be. And this might be very helpful for somebody who's struggling. It might be, the way I look at the market might be simple to somebody else. And they like, oh, I want to look at the market this way. So, I just realized, if the worst thing that happens if I post all of these on YouTube is that nobody ever sees them and looks at them, and I just have it on my own little journal of my back testing. And as years go by and I'm still trading, you feel me? I get to see how my trading has evolved and revolutionized itself. Because I mean, I was looking at some videos yesterday just from earlier this past year, and my trading is completely different now. I feel like my trading now is more set though. Like it fits more who I am as a person. And that's a big key. You feel me? You can't just look to trade like your mentor because they're making money, because they found something that works for them. You really gotta. I didn't really start seeing a big difference. I was copying everything my mentors was doing, and it wasn't working for me because I wasn't like them. I didn't have a need to swing trade or intraday. Scalping hit more for me. Scalping made more sense to me. Scalping was most efficient to me because I'm somebody who likes to sit down and get things done. So the fact that I'm able to wake up at 7 o'clock, sit down, trade till whenever my trades are done, analyze my trading session right after I finish, back test it right after I finish, and get all of my trading things done within my 4.5 hour time frame. I like that versus having to be attentive to the markets all day, or having to keep checking over and over throughout the day what the charts and what the market is doing. I don't know, that was just more stressful for me versus like after I leave my computer at 11, I'm not looking at charts again for the rest of the day until tomorrow morning. Now on the weekends, I take some time to back test depending on how the week went. Like if it was a bad week, or I feel I got a little emotional through the week and my confidence got shaken, I'm going to back test more to keep confidence in my edge. If it's a week where it was pretty good, or even if it was a losing week, but I understand why things went the way they did, I'll always back test the week that I traded. So tomorrow will end the week. So on Saturday and Sunday, I'll be back testing this entire week that I just traded to make sure and see how consistent the results are. So the results that I actually got in the real market versus the results I get in my back testing, they should line up and be fairly similar. And that means that the way I view the market is consistent if they do come out similar. If they come out very different, then that's where you got to really look and dissect and say, hey, what's the difference in how I'm viewing the market when I'm actually trading and the way I'm viewing the market when I'm back testing? Because I'm seeing different results for the same setups in my back testing than my live trading. If you're seeing the same setup, same things, like I said in the last video, back testing then becomes a little less necessary. You feel me? Back testing is more so just for you to rebuild confidence or try out new ideas you have for your edge that might make it high probability. But once you really get your edge down packed, even losses are going to come regardless, but once it's down packed, you don't have to study it as much anymore. You just do it to keep confidence, make sure you're seeing it the same way, and like again, try out new things that you might be thinking of. For me right now, that's all I'm doing, just showing up, executing, understanding that okay, I'm in the worst time of the I found my stride during the worst time of the year. So just getting the experience of being in the market, being live in the market, dealing with this. One benefit to trading Q4, as I guess is more like an intermediate to advanced trader, because as a beginning, and this ain't against the beginners, but as a beginning trader, you're trying to find what works for you. Once you hit I would say the intermediate level is once you found something that works for you, and you're like, okay, I'm gonna stick to this one thing. And now you're just trying to perfect that one thing or master it in a way that works for you. And once you hit the advanced level, in my opinion, the advanced level is once you have a trading plan that's set, the ins and outs of your edge, and you just trade it. You still take wins, you still take losses. You're not immune to any of those, but you're so comfortable and confident in your edge and your trading plan. You're never unsure of what to do when you're in the market or in a trade. You always know that, hey, either I'm being presented an opportunity or I'm waiting for an opportunity to present itself. Really the only two things. And what you'll start to realize when you really are focused on only one edge and not chasing wins is that you're going to be waiting like 80% of the time. 80% of the time you're waiting, 20% of the time you're actually executing trades, managing them, waiting to see what happens. Literally, I got like I said earlier, I got in my first trade around 7:20, right here actually. I got in my first trade at 7:25. I got out of my first trade at 8:30. That's an hour and 15 minutes. Got in my second trade 8:35. Got knocked out of it 8:55. That's more along the lines of how long my trades take. Um. Okay, so we are about to see with this one. I'm recording with the mic from my iPhone, so I'm only saying that to say that 13.5, 14.5, that's 29, so 29.5. I only say that because I'm placing the trade off my phone because I'm not signed into the account on my computer. Because with the MetaTrader on my computer, I can only sign into one account at a time. So, and they don't give you the option like on the phone where you can switch between accounts. It's more so like, oh, you're in this one account, you got to completely sign out and sign into the other account. It's just too much on the computer. So I keep one account, whichever my main account that I'm trading day in, day out on my computer, and my accounts that I play with occasionally on my phone. I thought we was about to get the confirmation candle, but then it turned bearish. That's why I don't just rush in because of how it looks. I wait for the close of a candle, and I wait for a close and a break. So price is still pushing deeper into this zone. So I'm still just waiting on a confirmation bullish candle, and if price can push past that confirmation bullish candle, then I'm looking to enter. Oh. But yeah, another thing I was saying is, I think I kind of got off track. But yeah, I was saying the worst thing, you feel me? Nobody ever comes across, and I just have a journal of all my things. But best case, somebody comes across it and it helps them. It changes the way they trade or look at trading, or they just pick up a little tidbit, or you feel me, in the waiting times or beautiful times like this where, okay, I did my back testing, but now, I'm actually taking a live action trade based off of where the market is. And that's going to make this video a hell of a lot longer. Hell of a lot longer than I actually anticipated. But it's okay, though. At least it's knowledge being given. I'm spitting out things I know. You feel me? I feel like regardless of whatever phase you are as a trader, you can always learn something. A couple of things I do differently than most people is I have the 4 hour here, but I haven't used the 4 hour in a while. I use the 3 hour. And I use the 3 hour, and a lot of people don't use the 10-minute either. They use the 15-minute. My reason for it is just things look a lot cleaner, and it matches more to the thing. So, like, let's look at the 4 hour, right? The 4 hour is the 4 hour. It does what it does. But when you look at the 3 hour, you can see more of the movements, the cleanliness, the pullbacks, and the 1 hour aligns more with the 3 hour aligns more with the 1 hour. The same way, like, the 15-minute and the 5-minute, like, they're close, but, like, I don't know, the 5-minute and 15-minute structure, they're just a little too far away. It's hard to explain. But the 10-minute is like the perfect complement to the 5-minute. So that's why I love using. So those are two time frames that aren't the typical time frames. But hey, I mean, if you're struggling, or you feel me, your 15-minute analysis and your 5-minute entries aren't working well together, or your 1 hour and 4 hour entries aren't working well together, try out the 3 hour, try out the 10-minute. It might be life changing for you. It was like, Lord knows it was for me. So that's a couple things I do differently. I'm just at this point, I'm just kind of just saying stuff based off what I see. Every now and then, I just change the colors of my candles and my boxes, and I save them as default. I've had them blue and yellow for probably about a few months now, honestly. So who knows? At the beginning of the year, I might change the color of my candles again. I might leave them the same. I just do it for aesthetic purposes. Like, it ain't no real reason why I do it. Like, oh, it doesn't make me a better trader or feel better. Like, no. Just, hey, you get tired of looking at the same thing, change up some colors, change the color of my moving averages. That's another thing. I mean, I know other people use moving averages for different reasons. I use the 8 and 14 EMAs. Shout out to Swaggy for that. Back in the day, Swaggy, he put me on to the 8 and 14, which is perfect for entries and spot reverses. Well, that was the idea of it, but what I've just noticed through my trading is like it really do be spot on though, especially if you a scalper. Especially if you a scalper. Like I mean, intraday and stuff, like it lines up. Like it ain't. It's not. Yeah, this one probably not gonna be. So I can leave this one for a little bit. Like higher time frames. I'm not saying it's gonna be like end all be all like the most perfect, but it definitely gives you that smoothness to it. But on like these lower time frames, like really look at where price tested. Like boom, tested here, pushed right off. 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 Boom, broke above it. Tested here, gave a nice little push. So it can work for you depending on what time frame you trade and how you want to use it. Boom, it's trading between price, broke below, tested here, pushed right off. Like the 8 and 14 be hitting. Now, I don't use it as a confirmation. I'm definitely more a market structure trader. I'll use it as an extra confirmation or as a reason to be like, okay, that's just another reason why I'm confident in the trade I'm taking. But it's not. I will not take a trade just based off solely the moving average being touched. You could like when you really look at it. I mean, you could. But at the same time, you know, with the moving average, one thing I notice is like it's hindsight 2020. So when price is actually like, is this one gonna, give me 1 second. I'm just seeing if this one gonna close yellow or not. Okay, it's not closing yellow. So like here you could clearly see, oh, it touched it and pushed off. But if you do like a bar replay, you feel me? You haven't seen it really touch yet. You really don't know. You see the crossover, you see the tap, like, and then it shoots. Now, I mean, I guess maybe I don't know what I'm talking about when I came to that part. I mean, but some people use the moving averages, some people don't. I'm one of the people who don't. But I'm gonna be 100% real with you. See, that gives me the idea now of like maybe I could use like the moving average as a scaling opportunity. Once the moving average flips in that direction on my trade, if it pulls back, touches it, and gives me a confirmation candle off of it, you feel me? That could be a perfect opportunity to scale into trades. You feel me? Oh, but the last thing I was saying is like the fourth quarter for like intermediate to advanced traders. Basically for any trader who has found your stride and you're like, okay, I love my edge now, but you haven't got the opportunity to be profitable. And let's just say you had this aha moment right in fourth quarter. You feel me? The fourth quarter you're probably going to keep losing and not understand why. Like, oh, I got the perfect, but because you're committed to it and you're like, I'm sticking to this edge no matter what. The beauty in that is you get the opportunity to master losses or master losing. And once you can master losing, bro, it's up from there. Master the art of losing. You know, in this fourth quarter of trading, I have found ways to master losing, ways to cut losses. Like that 1 minute management thing, like more times than not, it actually protects me from losing big amounts of money because before price ever reverses on the 5 minute, it leaves me a hint on the 1 minute. And that's with every time frame. Before it reverses on the 3 hour, it leaves a hint on the 1. Before it reverses on the 1, it leaves a hint on the 10, on the 5 minute, and so on and so forth. So, you know, this fourth quarter has given me the opportunity to put a lot of things in my trading plan in place to manage my losses. Not to change the amount of times I'm going to lose, because if I'm going to lose 10 times, I'm going to lose 10 times. But to manage the amount I'm losing when I am losing. So instead of taking 10 losses at full stop loss, you know, I might take 2 or 3 at full stop loss and the rest of them are early exits because of the hint that the 1 minute left me. So that's one of the beauties in disguise is like when you're trading during a losing season, or you really get the opportunity to evaluate your trading. Because if you can master the losing part of it, you have nothing else to fear. And now when the wins start coming, you're better prepared for them because you weren't getting as many wins during the fourth quarter. So you was mastering losing, so that even with you taking more losses than wins, when the wins came, you feel me, you were still able to grow your account because you were making sure you weren't taking a bunch of full losses back to back to back. So now when the winning season comes and you're just winning, 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 and you're barely losing, you still are able to manage those losses in an efficient way that keeps you from taking a whole bunch of full losses. So now when the winning season comes, you're just stacking profit on profit on profit on profit. So if you're somebody like me who found your stride, your aha moment, whatever you want to call it, around this fourth quarter area, don't get upset. Don't get discouraged. Like, understand, hey, this is the worst. I can't really trade from October to December and try to judge this edge. I need to give this edge a full year. That way I'm go through. I see that's another thing. When people try edges for a couple months and then leave it alone because it wasn't working, it's like, bro, you didn't give it the full task. You have to try an edge out for at least a year. Because you could just be in a quarter where your edge doesn't work and you don't know that about your edge yet because you haven't traded it long enough. Me, I understood. I've traded long enough to understand that the fourth quarter is the worst quarter to try to trade, to try to profitably trade. I mean, of course you can get in there and trade, but to try to profitably trade is the worst quarter of the year to do it. So the fact that I started really hitting my stride with my edge in the fourth quarter, I had to take into account and understand that, hey, I'm probably going to lose more than I win just because the time of year it is with my edge. But I can still get a lot of insight. I can still learn a lot of lessons by showing up in the market and trading. I can manage and master my losses. Like, there's a lot of things I can learn through trading a losing season in my edge. So now when first quarter and second quarter and third quarter come, like, now I can get a better idea of what my edge looks like in seasons that are peak for profitability. But yeah, understanding that there's still lessons to learn. I've learned a lot of lessons through this losing quarter, but this is a losing quarter for most traders, not for just me. Like, most people in the fourth quarter, most of the best traders don't trade the fourth quarter, or they reduce risk in the fourth quarter because they already know the fourth quarter is cheeks. So just looking at it, at understanding that and looking at it from a learning perspective, like, hey, I'm able to turn what most people hate to do into something that's beneficial and productive for me. And now when the tides flip, you feel me, we gonna be straight. So this move is still pushing down. Is it irritating? A little bit. Not in a super duper horrible way. Like, it's irritating in the fact of, like, damn, I actually called the downtrending move. I just wasn't able to take advantage of it because I got liquidity snatched twice. I got liquidity snatched here and I got liquidity snatched here. If I would have put it here, we can say maybe I wouldn't have gotten stopped out, but depending on how tight I would have put it here, it still broke that high and snatched liquidity there too. So I can't even sit here and be like, oh, if I would have done this differently. Nah, it definitely puts into perspective. Always give your stop loss room for things like this. So now the next trade, I'm probably going to go with structure versus trying to be super tight so that I don't need as many pips in return. But hey, the downside move played off. So I'm going to end this video. If price closes below here on the 5 minute, I'm done completely for the day. I'm not playing around in any of my other accounts. I'm literally just going to end the video. If price pushes back in here and closes within here before the 5 minute close, then hey, we're still waiting for a confirmation opportunity. So right now we just got 2 minutes to see. Whew. Two minutes and 30 seconds. Let's see what's going on. My God. as of right now, it is definitely looking like it is not going to close. Yeah, it's definitely look like it's about to close below. Uh, what I'll do sometimes also is go to the 10-minute and see, but this is a 5-minute zone, so really if it closes outside of here, I'm done with that move. Got a minute, 20 seconds left. Yeah, one thing I also realized, you can never assume. Just because it's in the last minute, bro, I've seen Price do some of the craziest stuff in the last 10 seconds of a candle close. So never assume that you know what's going to happen just because it's only a minute left or it's only 30 seconds left. Bro, Price can go crazy in a matter of 5 seconds. So you hold on to whatever your analysis was going to be until that candle actually closes. That's part of the reason I enter off the close and push past of a candle, because if I enter mid candle, you feel me, that same candle, I can enter 30 seconds before that candle close, and that candle can close in a way that's no longer a confirmation just in that 30-second time frame. So be patient with it. We got 17 seconds, 15 seconds, 10 seconds. So it's looking like we are not fucking around with this. And we are not. So that's going to end the video. I am done trading for today. Hey, I thought we might have got a live trading opportunity. But hey, this is an example of what I talked about as far as trading being majority patience. And sometimes you can be patient. And guess what? The market still don't give you shit. And when it don't, you don't have to force nothing. You don't have to take a trade. You could just, hey, stay cash. Keep your capital. In trading, holding on to your capital and saying, I'm not comfortable, I'm not confident, I'm just not going to take a trade at all today is not a bad thing. But till the next video.